All right, hello everybody. All right, well, welcome everyone to our webinar here today. So glad you're here. Steve, we couldn't have a prettier day here in Decatur, Illinois, could we?
It's unbelievable. Blue skies and 70 degrees.
Beautiful, cool. I hope it's a great day wherever you are, and thank you so much for joining us on the Lasso presentation here. Steve, do you feel like we're getting some huge momentum on this product?
Yeah, it's getting to be that time. I'm seeing a reverberation back from the field force, even as I start calling people. They're starting to gear up for AEP. We're going to, AHIP is in the, it's on the front burner. We know that it's coming right around the corner. Right. Certifications, and it just, the blood starts rolling. It's just predictable. Yeah. So we're there.
Yeah. Well, let's jump in and get going here, guys.
Yeah. Yeah. We've got quite a crowd today, so what we're going to do is that we assume that we're going to have a lot of questions, and we're going to field these as we go, but please keep the questions coming. If we don't get to these questions, we will get back to them in mass at the end. Probably tomorrow by the time we get everything out and whatnot. So
you bet.
We hope to have a couple of surprises along the way. We'll wait for those to pop up, but I'll let you start things off, Jason, if you want to get us to that first slide, and we'll get this thing going. Part of what we do, obviously, as well as we always want to go over these fundamentals. Out of the entire crowd that we've got today, probably 40% are people that have heard this a lot, and maybe 60% of the population may not know some of these things that are inherent with all medical savings accounts across the country. Right. So I'm going to let John go through those, but there's four basically pillars that we have.
Okay. All right. I'm going to take a stab at this. You know, I'll say at the beginning that I'm probably as average of a guy as there is. And I've known about this product now for a year. But it just seems like the more I'm around it and the more it just kind of settles in on me and I understand it better, you just come up with more and more scenarios where this is really a fantastic way to go. So here we go. Number one is there's no networks. And for the MedSup guys out there in the audience, and I really consider myself that's probably numero uno, that in that regard, this works just like a MedSup, that as long as that provider takes Medicare, it works. Mm-hmm. It doesn't matter where you are. It doesn't matter what state you're in, where you might be traveling to. So for all of the guys that are in the rural areas where there just really isn't a strong presence in networks, this works just like a MedSup in that regard. Right, Steve?
Exactly correct. Number one thing, it's the number one feedback that I get from brokers about the most important piece of this whole project is that the fact that there's no networks associated with it. Number one.
Numero uno. So second pillar is it's zero premium. So that's true with any MSA or all MSAs. There can be no premium. So you never have to be concerned that at some point there might be premium added onto it on down the road. It's always going to be a zero. The other thing that's true, point number 3, is it's an MA only. So there is no prescription drug included in it. And we really look at that as an advantage because it allows you to tailor make the PDP to fit your customer. So many of the MAPDs, it's great in the area, but people will say, gosh, but the prescription drug really doesn't fit my customer, but you're stuck with it. With this, you're not. You're going to be able to fit them right where they belong.
I personally love this piece of it. It's an actual huge benefit. As far as leveraging the best possible outcome for your senior client, this product was made by agents, it seems like, and it just absolutely serves our clients so very, very well.
Yeah, love that point. And then the fourth point is there's always an annual deposit made by the carrier. So in this case, that of course is Lasso. So Lasso is going to make a deposit, and we'll probably get into this a little bit more, but into that person's account, and that is that person's money to use towards any qualified medical expense. You want to elaborate on that a little bit?
The only thing I can add to that is a couple things. One, it's going to be a floating number on an annual basis. It depends a whole lot. The mechanism works basically a little bit like this. It's got more moving parts than this, but based on what CMS has in a subsidy for these insurance companies, based on the number of beneficiaries, they take this and they make a bid on what they can do as far as the deductible and what the deposit is. Now that's going to be a floating number depending upon the government and what that stipend is.
But for this year, 2019, what was the deposit?
The deposit was $2,520 for the entire year, for all full 12 months. Once again, it was the deductible was $6,700 in Region 1, $7,700 in Region 2, $8,700 in Region 3. The same deposit was made across all 3 regions. So those are just some of the basic tenets that we have to remember are always going to be there anytime we start talking about a medical savings account. So,
all right. Well, that's kind of a broad overview. I know there's going to be a lot of questions on that. We'll try to get them as they come in, but that kind of gets us back to our fundamentals right there each week. Yep.
We, as many of you have seen this before, we're just going to quickly gloss over this, but we have put some strategies in front of you where we think that this is a little bit broader target than that person who is strictly in very good health and has a lot of money. We're not going to touch too heavily on this because we've got videos that are available to these people, or if you want to call in, we can talk about any of this stuff. We've got a lot of ground to cover today. But just let's let it be known that as we inspect this and as we go through some of the numbers, this is actually is a wonderful product for a lot more
than just that healthy, wealthy, we'll say, customer.
Exactly.
It's a no-brainer, like it says in that box there, for that customer. But man, there's a lot of other people that this fits and really makes good sense to go this route.
Exactly correct. Again, this goes back to the first chart that we took a look at, and basically even the people that have got a few chronic conditions, the odds of them going into the hospital in an overnight stay, which is what a lot of people fear against their deductible, simply doesn't happen. You can see right there, we'll just be real quick, if you've got 1 or fewer chronic conditions, there's literally a 96% chance a person over 65 is not going to go to that hospital. 2 to 3 chronic conditions, that goes down 87% chance. So this allays a lot of the fears that people have got as they sit across us that say, man, if I end up at that hospital because of this,
right?
We can share these kind of numbers,
yes,
to kind of give a little bit of security in the fact that although there is no crystal ball and we can make no guarantees, the odds are in your favor.
Right.
So that's the purpose of this right here. What we've done is that we've created a worksheet. So many times we've talked to different brokers across the country about the 1 or 2 years that we seem to be a little bit concerned with, and we don't get that long-term, let's take a look at this in the long run. I've got 25 years in the employee benefits business where I've worked with employers, and we take a macro look at where this is going to be. So what we wanted to do is we wanted to take a look at a comparison worksheet on some hypothetical numbers, that this is what it's going to look like over the course of 10 years. Jason, our tech person here, has made it available where you can get this. I'm sorry, I'm in trouble. I'm in trouble.
All right.
But anyway, let me just back up on that. But my guru here has made this available where we can you can fill in your own kind of numbers that you want to fill in. But I'll let him explain that when the time comes. But what we wanted to show you is that over the course of a 10-year period, even as my claims increase, if the deductibles stay the same and the deposits stay the same and the plan G stays the same, you're going to see quite a difference between what I'm going to have in the bank and what it would have cost me at the end of that 10 years. And it becomes more apparent that this is a broad.
So let me make sure I got it. So what you're going to talk about today is you're going to hypothetically compare a plan G med sup over a 10-year period compared to the Lasso Medical Savings Account MA over that same 10-year period. And kind of see where we're at.
Exactly.
Comparing premium, no premium, claims.
You're going to say, oh my goodness, so if the contribution goes up, this is going to be better. Or if my premium goes up on my plan G, that's going to be better.
Yeah.
So the 2019 deposit amount is going to remain constant throughout our analysis for these 10 years.
which we know in reality isn't going to be true, most likely. It's going to change.
It's exactly
But you're
correct.
using the $2,520 for all 10 years.
Correct.
Okay.
A healthy client taking a reasonable small QME with it, and we're going to let it increase by $200 annually. The first year, we're going to take $500 out of that deposit. Year 2, we're going to take $7. Year 3, $9.
Okay.
And you'll see this as we take a little bit more, as we get a little bit older, we're going to be a little bit more unhealthy. We could be taking more money out of that. Let's see what this looks like.
Okay.
Okay, so let's just stay with year 1,
all right.
2019. The deposit was $2,520, okay? If we put in there throughout the course of that 10-year period, okay, here we go. If we took $500 out of that for the withdrawals on a qualified medical expense.
All right, year 1.
Year 1, we're left with a net of $2,020.
Okay, so let me make sure I got it.
Absolutely.
So you're looking at the annual deposit of $2,520, and you're saying if I had to pull $500 out of my savings account to go towards medical expenses, I've got $2,020 left in that account.
That's exactly correct.
All right. Okay.
Okay, here we go. So now we're going to take that $2,020. Hypothetically, we're going to put the same $2,520 in that account in year 2. And now I've got $4,540. I'm going to increase from $500 on a withdrawal to $700. I've got $3,840 left in this. Okay, everybody follow?
I do.
Good?
I think I got it.
And if we follow this scenario all the way to the bottom, you will see that in year 10, okay, I'm going to have a bank account of $13,500. The withdrawals, I'm going to take $2,300 out of it based on that increased amount over the course of those first 10 years for a net gain of $11,200. I've got, even though I've got increasing claims, now, again, this is hypothetical, but you get the idea that at the end of the rainbow, even with increasing claims, no increases to my deposit from the insurance company, that I still have a net gain at the end of that 10 years, besides having a zero premium,
right?
Besides being able to go to any doctor that is Medicare approved, besides putting my own prescription drug plan together,
right?
I now have a bank account that I get to take with me,
right?
Anywhere I go that has got $11,200.
Yeah. Yeah,
okay?
It's powerful.
It is very powerful stuff. So now let's take a look at what the, and this is a typical Medigap Plan G. John, you
no doubt. You know, this is my language here, but I know in my mind, whenever I think of a MedSup premium nationwide, I take $1,500. And so the numbers that Steve and Jason have used here, the only thing that's not right on this is it's $1,500 now as an average, but we all know that rate increases happen every year in the MedSup world. So that premium is not going to stay constant over 10 years. That's a given. But anyway, I think we're right on the money starting out.
Sure. So we take this hypothetically,
yeah,
a fairly healthy individual that had the chance to get a MSA plan,
right?
That we go through 10 years, we took a little bit more out all the time, versus paying $1,534. Let's go down to year 10.
Right. That's ultra conservative. It's under.
It's under.
Of course it is. But that's okay. Of course it is. That's okay.
But we see that we're outlaying money of $15,342 over the course of that 10 years for that protection underneath that Plan G, versus taking that responsibility with my MSA where I've got $11,000 plus to the good.
Right.
And so when we look at this from the 10,000 foot view over a 10-year period, there's very few opportunities that we as brokers get an opportunity to leverage our clients' money better than this. Your reputation throughout your client base is going to grow exponentially with this very factor right here. Anytime you can take a $15,000 expenditure, turn it into a $10,000 positive gain, even if it's hypothetical,
right?
It could be better. We think it's even going to be better because we're conservative here. I think it's going to bode very well for everyone's reputation and the fact that we're going to be given more and more.
I like it. So let's see what the next one, I think the next one is the graph, isn't it?
Yes.
We'll get him on here.
Okay.
We got a surprise.
We do have a little bit of a graph here. John, you want to take this? You want me to take this?
Yeah, I'll just jump in. So there you can see the comparison between the MedSup and the MSA year over year over year, comparing the two, that you have the gainer on top and the loser on the bottom there. So really it's about a $25,000 swing or net gain between the two, between the premium that I'm paying out. I'm not paying premium on the MSA account, plus I'm getting money added into my account. You know, and the thing of it is too, at any point along the way that this MSA becomes not the right product for your customer, what do? They make a change, right?
Look at the gap that goes in there. 5 years, 4 years, 7 years.
Exactly. So maybe in year 4 or 5, they need to make a move. Maybe they have a condition now that they know they're going to run through that deductible every year, to either go back now to traditional Medicare or to go to a more traditional MA product. They keep the money.
Yeah.
So all the money that's been in their account is going to stay right with them for the rest of their life. And then if they haven't used it, it goes to the beneficiary. It's really a unique product. All right, I got to just jump in here. I think can we do this, Jason?
Yeah.
You know, here's what I know. When the head coach walks in the room, the assistant coaches should shut up. And we just had a little surprise here. Jim Hanlon, the president of Lasso, just popped in here on our little talk right now. So I think we're going to try to open the mic up to Jim, bring him in on our conversation, and we'll visit with him for a little bit. And did we lose him?
Yeah, he was wanting to know how he dials in. Can you?
Okay. Hang with us, guys. Hang with us, please.
In the meantime, we have a couple of.
Yep.
We'll keep going here till we get him on.
Okay.
Let me read it.
Yep.
Okay, we got some questions. Are medical expenses paid by Medicare on the deductible plus 20% coinsurance basis? So let me read the question again. This is from Jim. Are medical expenses paid by Medicare on the deductible plus 20% co? So explain exactly, Steve, what goes towards the deductible. How do you meet that deductible?
That deductible is met.
In 30 words or less.
Okay. You basically, your client is 100% responsible for the Medicare approved amount for everything under the deductible in your region.
Okay, so let's say we're in region 1 and the deductible is $6,700, right?
Yep.
And I go in as an outpatient. I have a $1,000 outpatient charge. Okay.
Mm-hmm.
We submit that to
Lasso.
Lasso is going to look at it and say, what would the Medicare approved amount be on this, which might be $100. If you guys all know how that works, especially on Part B charges, right?
That's
Outpatient
exactly correct.
charges. So is it 1,000 goes? Am I responsible for 1,000, or am I just responsible for the 100?
By CMS rule, you are responsible for the Medicare approved amount.
So in that case, $100.
$100.
$100.
And that $100 is going to reduce your deductible and is going to be required to be paid off your Optum. Optum is your custodial account, and so the $100 is going to come out of the 2520 and down from 67 or whatever region deductible you're in.
Okay. Yeah, real important question, and one that everybody has to really be rock solid on how that deductible works.
Yeah, and a question that we face a lot too is in the area of well care.
Uh-huh.
And so we're not going to get into all the mechanisms on what Lasso's got to take care of that, but even well care, people are responsible for 100% of the Medicare approved amounts,
right,
for everything less than that 67 or whatever region deductible that you happen to be in. Now, Lasso has a 3-step process that we have actually 50% of all the enrollees have taken advantage of, have filled out a health survey, gone to the doctor, and there's a gift card coming back that total of about $250. It's a wonderful benefit, but let's get some more of these questions.
Okay, another question here. What is the max out of pocket on your hypothetical chart? So let me see if I can do this one.
Sure.
So the max out of pocket is a deductible. So if you're in region 1 in your state and the deductible is $6,700, once you've met that $6,700 deductible, which is a straight up deductible, so it's any Medicare approved charges are going to go towards that deductible. After that, it's going to pay 100% of all Medicare approved charges,
Yeah,
right?
and that's minus the deposit. The deposit of $2,520 off that 67, it's $4,180
Right.
in John's scenario. So that is the maximum out of pocket for eligible expenses for Part A and Part B
Right.
under the Lasso piece.
Okay, another question. What happens to the money in the account that's built up if Lasso goes out of business? Steve.
You want me to take this?
Yeah.
Okay, here we go. Once Lasso puts that money in your Optum account, that money is 100% and solely belongs to the beneficiary. At the end of 10 years, you've got that $11,000 built into it, and all the stars are crossed up wrong. That $11,000 will always and forever remain with your beneficiary. In the event of their death, they will name a beneficiary, and that money will stay inside their bloodline or go from one generation to the next. That money will never leave the possession of your beneficiary once that deposit is made on January 2nd.
Right, excellent. Okay.
Did you get this one?
Yeah, somebody asked, are these illustrations available? Absolutely. And I think if you go to our website, right?
We're gonna paste a link at the end of this, and we'll be sure to email it out to everybody.
Okay. All right. What else we got here, Jason?
If I can add one more point about that, about the maximum out of pocket, like the deductible, the deposit and the deductible are going to be floating numbers throughout this entire scenario. So that maximum out of pocket is going to be a floating number as well.
Okay. All righty. Jason, have we got some other questions here? I hope this is.
We're in.
If I have a credit card balance, that now?
No.
If I have.
This person says, I have a care credit balance for medical expenses previously. Can I use the deposit to pay down the existing balance? The account, I don't know that I know that if it's been typed right, it says I have a care credit balance. That deposit can be used for any qualified medical expense, right? So like it could be used for dental work, it could be used for a hearing aid, anything that the IRS would consider qualified medical expense, right, Steve?
Yes. If here's, you know what, and I'm not going to say anything because I'm going to find out, and we'll get back to this person.
That person's kind of a tricky question, because this is maybe something that happened 2 years ago.
Exactly.
That expense was maybe occurred then. And they're asking, can I get money, that $2,500 now, and use it back on an expense that incurred previously? We'll get the answer for that.
Yep.
All right.
I think I know the answer, but I'm not going to spout it out because I just don't have that down in gospel form right now.
Okay. Next question says, how do we know what region we're in? We've got maps on the.
Right. You can go to www.lassohealthcare.com. It's the easiest website that a neophyte like myself has found to be home. You literally can put your zip code in there, hit a button, and it will tell you exactly what your deposit is. It will tell you what your deductible is, and you simply will go from there. Okay, so if we put on this is what the website looks like when you first go to www.lassohealthcare.com. If we enter a zip code 62521, that's here locally. Because we're mid-year, the monthly premium is always going to be zero, okay? The deposit is going to be less than the $2,520. Because we're mid-year, we simply do not get 100% of that deposit.
That's the deposit that happens on January 1.
On January 1 for the full 12 months, okay? This is where my deductible is going to pop up, and the member responsibility is always going to be $4,180 throughout the year. If we were to take an application with a person, that's when the specific numbers would pop up to find out exactly what my deductible. But when you ask me the question, what's my deductible, what's my deposit, okay, you go into this website, pop in the zip code of the person that you're speaking with, and this will tell you $6,700 on the deductible, which should trigger that you're in region 1.
Do we have Jim on, Jason, or not able to get him?
Currently, everyone's on mute. So what we could do is stop sharing the screen and go to the gallery view.
Okay.
See if he's on.
Bear with us, everybody.
Yeah, we're just saying if Jim
we've-
Hanlon is on here, we'd like to get him on for us if we can.
He's the president of Lasso and co-owner, and I tell you what, I've learned an awful lot from this gentleman, and
Doesn't look like it.
Looking for the last 4 of his phone number, and I don't think.
Don't
it's
see
on.
it? Okay.
okay, all righty. We'll
all right.
set this up at a different date when we know that we're going to get him in the
Yeah.
house. It was a last-minute attempt, and he was going to try to fit it in, and we simply don't.
We got
have
a
the
bunch of
wires.
questions though here
Wires
to
connected.
keep
Okay,
rolling on.
that's
And
all
hopefully
right.
this is helpful. So, what happens to the money in the account that's built up? Oh, we've already answered that one. I'm sorry. Who makes the annual deposit, Steve?
The deposit actually is a derivative of the stipend that comes from CMS to Lasso. Lasso takes a chunk of that stipend and instantly bypasses their system and takes that deposit and puts it in
So
the
the
custodial
deposit's
account.
made by Lasso. Can the customer add money to it?
The company, it's closed.
Yeah.
No additions to that
No additional money.
fund whatsoever.
So the money in that medical savings account is put in there by Lasso.
Yes.
Okay. You see one here, Jason? Does the beneficiary deplete the optimum yearly amount first and then start paying out of pocket for that one particular year, or when does that happen?
It's going to be totally up to the beneficiary. Now,
Okay.
the money's there for their use.
Mm-hmm.
Now, I know people that don't like to spend that money and will pay out of pocket, but that money is going to be deposited. The entire yearly balance is deposited in January. It's not January 1st. Everything's closed on January 1. So January 2nd, that entire deposit is made.
Okay.
And that is available to that person starting that day. So the answer would be yes. They would deplete, in my opinion, their Optum bank account first against that deductible and hopefully have nothing out of pocket out of their own money.
Right.
And then have no premium on top of it.
So totally their call.
Totally their call.
All
Totally
righty.
their call.
Here's one. This is from Betty. Hey, Betty, this can be enrolled online. What about scope of appointments?
Okay. Scope of appointments are required in all situations. If we do a paper app and we fax it in, the scope of appointment is expected to follow the paper fax.
Okay.
In the event that we do an electronic enrollment, a paper scope is still required and not to be sent in, to be kept on file. In fact, we've gone through the audit, I think, for the first 3 months, and basically have gone to the brokerage system for the scopes. I
see.
So they have to be made. If you submit it electronically, keep it in your file. If you submit it by fax, it goes with the fax.
I got you. All right. Thank you, Betty. After each year, are you free to take the leftover money out?
Good question, and the answer is yes. In fact, the money is yours on January 2nd. You literally can take a deposit and you can move it into another HSA bank if you'd like.
Mm-hmm.
Now, at that point, you are responsible for all the consequences
Right.
of that move, but you literally have access to that money to do with whatever you please on day one. Strongly urge everybody to utilize it for qualified medical expenses.
Yeah, because if you take that money and go out and buy a TV, what happens?
Okay. Ordinary income is good. You're going to be, if say for example, I take $500 and go buy a TV. I am going to pay ordinary income. If I'm a 20% tax bracket,
Okay. So
I'm
you're going to
gonna pay
pay, you're going to be
20%.
taxed on it,
that's another $100.
right?
And then there's a 50% penalty.
Oh my gosh.
So another $250 on top of the $600, $850 later, I now have a $500 TV.
I mean, you can, but it makes no sense to use
Please
it
don't.
only for
Please don't.
medical expenses.
Yep.
But it doesn't have to be Medicare approved expenses.
That's exactly correct.
Right?
Great point. Great
Okay.
point. The qualified medical expenses include, it's a greater spectrum: eyeglasses, dental work, hearing aids, chiropractors, experimental drugs,
Deductibles on your PDP,
deductibles on your PDP,
copays on your PDP.
copays on the PDP.
What about premium payment for your PDP? Can you use it to
Nope.
pay premiums?
No, the one caveat, and I underscore the only premium that we can pay out of this deposit is an individual long-term care policy.
That's so strange.
Underline only,
Yeah.
because literally there can be no premiums paid out of the MSA account. Copays are no problem.
Right.
Premiums a problem.
Okay. All right. All right. My gosh, guys, we got a ton of questions. Is this subject to the AEP and lock-in? So when can you sign up for
Okay,
this?
there's two occasions. This is a great question because it's unique to MSAs. There's only two occasions in which you can get into this plan. AEP between October 15th and December 7th. This plan is eligible for anybody 65 and over that has an effective date with a Part B policy. The only other time outside that arena that we can get into this plan is during the initial coverage election period, the ISIP. I have to be new to Medicare. In other words, my effective date for my Part B must be in front of me. And then, so basically we got the ISIP and we've got the AEP. This is not OEP eligible. In other words, from January 1st to March 31st, you can do what you want in the other MA world.
But not this one.
Lasso is not eligible to be bought or gotten out of during OEP.
Okay. All right. Okay, another question about online enrollment. I guess
Okay.
This is from Betty. And Betty, you're at your 2-question max, by the way. Just kidding. I know Betty, but online enrollment.
Okay.
That's the only question it says. So there is an online enrollment.
Yeah, there is
You
an
really
online
can't drill
enrollment.
down into that, but
It's simple.
Yeah.
It took me 10 minutes to do it the first one. It took me 5 minutes to do every one after that. I think I'm a paper guy.
yeah.
A lot of us are. Once I did an electronic app, I'm telling you, it's the only
It's
way to
over.
go.
Yeah.
It's the only way to go. The only way to go, folks.
Okay. Does the money left in the account each year draw interest?
Great question. Optum Bank, I think, is the best financial partner that Lasso could have hooked up with. The reason I say that is for all balances in excess of $2,000, those monies can be held at a higher interest rate. Optum has 31 separate accounts that we can select from where everything over $1,000 or $2,000 can be put into
invest,
these.
basically.
You can invest. The interest that's accrued in there is tax favorably treated and added to the balance that we can carry forward.
Beautiful.
So going back to what we started.
What are the fees for this?
There are no fees associated.
No fees.
None. As long as you have a Lasso MSA product, there are no fees associated with dealing with Optum Bank.
Okay. All right. I'm rolling here. Please explain the claims process. Does the provider bill directly to Lasso and then pay directly to the provider?
This is good. Here's because again, this is all hurdles that we've got to jump.
Right.
Okay, so a beneficiary walks into their provider. Provider says, "Well, I've never heard of Lasso." Well, on the Lasso card, there is two numbers, two 800 numbers or toll-free numbers. One is for member services. HIPAA laws being what they are, if somebody calls me and says, "Steve, can you intervene here?" Well, the answer is yes, I can intervene, but it takes a long time. That member, if they're willing to pick up and call member services to address their problem, they'll find a very friendly face on the other end that can help them much faster than I can intervene because of the HIPAA constraints. I got to get a lot of permission. There's another phone number on there, provider services. The administrator of your doctor's office, your doctor. Lasso takes this very seriously from the standpoint that they have a bank of employees specifically trained to deal with the providers and their administrators, explain Lasso, explain the CMS requirements on any Medicare approved provider.
Right.
I have seen time and time again where that typically is about a 5-minute phone call. They simply call the beneficiary up, you're off to go see your doctor, and everything is taken care of. Now, let's say, for example, I'm a beneficiary and I go into my doctor and the doctor's bill is $150. I do not make any payment at that particular point. They've got 3 ways that they can get that claim to Lasso. There's 3 systems set up. They can select the one that they want. That claim gets sent to Lasso for repricing. That $150 office visit may be $60.50.
Right.
That is then sent back to the provider who sends me a bill, $150 for bill charges. The Medicare approved amount is $60.50. You owe $60.50. I simply call them up. I call up. I can give them my debit card. They can subtract the $60.50 and everybody's along their way. So,
okay, great. Let's see. How are the deposits and expenditures handled for income tax purposes?
Okay. Optum Bank will provide all tax forms for you to take to your accountant on April 15th of the following year.
Besides, you being the member, the beneficiary. Correct. Yeah.
Besides the 1040, there is also an IRS form 8853 that deals with tax favorably treated monies.
Do you really know all this stuff?
Yeah.
Okay.
That has to be filled out in conjunction with the 1040.
Okay.
So literally, outside of taking it out of the mailbox and delivering it with the rest of your tax information to your accountant, that's as far as you need to go.
Okay, I'm going to jump down a question here. Is AHIP scheduled yet? Okay, somebody just missed Betty again.
AHIP, we think AHIP is scheduled for this Monday at www.ahip.com. I know some people are waiting for some of the bigger players to offer the discount down the road, early July. But for all the reasons, we do believe that the AHIP is going to be scheduled for this Monday.
Okay. All right. Somebody says, what's a comp? What's a comp, Steve?
Okay. I'm not ready to release it for 2020 yet, but CMS drives it.
Right.
So it's already predetermined, and there was an increase. That's what we can tell everybody. And,
yeah.
But my hands are tied as far as what that exact number is for right now. There was an increase, and it's set by CMS. It's the same.
So what about for 2019?
For 2019, it was $482 on a new to Medicare.
Right.
And it was 50% of that
$241.
All others. And Lasso pays for life. So as long as the person has got the Lasso product, no matter if it's 5 years, 10 years, 20 years down the road, that will pay the renewal premium for life. For life.
Okay, if an individual goes into a long-term care facility, presuming no insurance, is a balance in the account and future deposits considered countable or not countable? I should have skipped that one.
That's from James Erickson. Hello, Jim. You know what, Jim? I'm going to have to get back to you. That is a great question. And I'd like to get a little bit more information, but I'll get with you. I'll give you a phone call. We'll go over that and we'll get the answer
or
back.
Or if that's something that maybe everybody want to know, we get it done.
Yep.
Okay, a couple more, and then we probably should wrap it up. And we're going to get you a lot of information, and we're going to keep doing a bunch more of these, right, Steve?
Within the next 30 days, we're going to be able to roll out 2020 stuff.
Right.
And I can promise the people they are going to be really excited. I can say that the deposit's gone up and the deductible's gone up. I can tell you that the deposit has gone up more than the deductible,
Beautiful.
Which is good news for everybody.
That's all you can say.
That's all I can say. I can say, well, we can also say that that we've had people out there that have sold individual accident plans, hospital indemnity plans. Lasso is not completed yet, but we're getting ready to sit there and talk more concretely to the general population about a hospital indemnity plan that specifically dovetails.
Yeah, it'd be beautiful.
It is unbelievable what we've seen. So,
all right,
good stuff, folks.
Good stuff coming. Okay, a couple more, and then we'll wrap it up. Can an individual enroll in mid-year if they have a valid SEP?
No, sir.
Can't do it.
The only time ISIP
and AEP.
And AEP.
That's it.
That's it.
Okay. If my client's a veteran but does not use veteran services, can he qualify?
He can. Here's a simple rule. If they're a veteran and they have a card a VA card, they are ineligible. If they're a veteran and have not signed up for benefits, or they disenroll from benefits, they're eligible participants for the
Okay.
Lasso MSA.
Okay. Okay. Let's see. If someone is Medicare eligible on December 1st of 2019, would one need AHIP for 2019, or would 2020 AHIP allow him to place the business?
2020 certifications will include 2019.
Okay, so once you get the AHIP coming up here real soon,
Yep.
for 2020, that will carry you out if you're not certified for 2019.
Yeah, and I see one more question about down here about the claims. It says there's 3 ways. Let's answer that question.
Okay, the question is, I thought you said there are 3 ways to take care of the bill, and I only heard one.
Okay, this is at the point of service at the doctor's office. They can submit a claim online. They can fax in a claim, or they can mail the claim in. That's my point when I said there's 3 ways for them to get that claim to Lasso. Those are the 3 avenues that they can get the claim to Lasso for repricing to expedite as quickly as they want to try to get their money. So that's what we meant there.
All right. Well, we went longer than what we thought. It's almost 45 minutes. Thank you, everyone. We're going to probably be doing one of these, at least one every 2 weeks, and maybe we're going to start shortening up and maybe one a week.
There's some good stuff coming out.
Just because we're getting so much attention on it. So thank you so much. Call in or email or chat, whatever. If you've got more questions, just reach out to Spinner here and he'll help you.
We'll appreciate everything, guys.
Thanks, everyone.
Thank you.